Welcome to the Deep Dive. Today, we're embarking on a pretty fascinating mission to really unpack the distinct investment profiles of three major players in the crypto world. We're talking Bitcoin, Ethereum, and Solana. Our goal here is simple: extract the most important nuggets from our sources, give you a quick but solid understanding of these really crucial digital assets.
Indeed. And they really aren't just names or tickers, are they? They represent quite different philosophies, different functionalities within this whole digital asset landscape. Understand their core characteristics, what makes each tick. That's absolutely key if you want to navigate this fast-evolving space.
Okay, let's dive right in then, starting with Bitcoin. It's often called digital gold. That label gets thrown around a lot. But what specifically, based on our sources, really solidifies that claim? Why a store of value? Why a hedge?
Well, what's interesting is how the sources really emphasize Bitcoin's almost laser focus on being this pristine store of value. Its primary appeal comes down to that fixed supply, the hard cap, 21 million coins, and the predictable issuance schedule. It's all mathematically enforced. Think halvings. This creates a scarcity, a pre-programmed scarcity that's really unique. It's not like mining more gold, which just gets harder. This is known. Our sources argue that's core to the whole digital gold narrative. Plus, you layer on the increasing institutional adoption we're seeing. That reinforces its position.
Right, so that program scarcity and preservation focus, almost like a digital reserve asset. But okay, when we say low risk for long-term investors, how do the sources square that with Bitcoin's famous volatility? Is low risk just relative to other cryptos, or is there something more fundamental going on?
That's a really important point. Yes, the low risk label is definitely relative. We're talking within the crypto market, which can be, well, hyper-volatile. Our readings point to its strong stock-to-flow dynamics. Basically, the existing supply, the stock, is huge compared to the new supply, the flow, so it gets scarcer over time. Combine that with the growing institutional role, think spot ETFs and the like, and it gains a stability within this asset class that newer coins just don't have yet. The analysis we looked at suggests this positions it for, potentially, significant appreciation. Some predictions, and these are just predictions from the sources, target ranges like $150,000 to even $300,000 in the next year or two, driven mainly by that deepening institutional integration.
Okay, so for you listening, if stability and hedging against those bigger economic shifts are your top priorities, Bitcoin seems like the main candidate. Strengths, store value, scarcity, that relative stability, and the institutional buy-in. The trade-offs, though: limited native yield, generally, and a much slower pace of innovation. That's by design, really. All right, so we've established Bitcoin's role, kind of the bedrock, the store of value. Let's shift gears now to Ethereum. Our sources paint a very different picture here, more of an innovation engine.
Exactly. If Bitcoin is digital gold, Ethereum is framed in our sources as, the innovation engine. Its value isn't just scarcity, it's fundamentally driven by its utility. It's the leading platform for apps, decentralized applications, and smart contracts, those self-executing contracts. That's Ethereum's bread and butter. Its strengths is this vast, evolving ecosystem.
And that evolution isn't just talk, right? The sources mention some big things, like the Pectra upgrade coming up, the huge growth in Layer 2 scaling solutions, and integrating real-world assets onto the blockchain. It sounds like a really vibrant, busy place.
It absolutely is. But what's crucial here, and the sources highlight this, is that Ethereum's future growth really depends heavily on successfully executing this ambitious roadmap. There's also this interesting nuance. As more activity moves to Layer 2s, for speed and lower fees, how does the base layer, the main Ethereum chain, continue to capture value? That's a key question. The consensus in our reading suggests that its long-term success really hinges on keeping that ecosystem cohesive and making continued technological progress. It needs to manage that dynamic.
So it sounds like it offers broader potential, definitely more exposure to cutting-edge blockchain innovation, but that comes with more risk. Execution risk, you said, and competition, I guess.
That's right.
Especially from newer chains like Solana, which we'll get to. And its price has been more volatile than Bitcoin's historically.
Precisely. So for an investment profile, Ethereum offers more of a balanced exposure to blockchain innovation.
Its strengths.
Well, it's a dominant DApp platform, constant innovation, huge developer community. That's massive.
Yeah.
But the risks, as you pointed out, execution risk on the roadmap, fierce competition, and that uncertainty around future fee capture as LS2s grow.
Right. So maybe suitable for those looking for growth, but comfortable with a moderate level of risk.
That seems to be the takeaway, yes.
Okay, so we've got Bitcoin for stability, Ethereum for innovation. Now let's pivot to Solana. This one has really burst onto the scene as a challenger. What makes Solana stand out? What's its unique selling proposition, according to our sources?
Solana is really all about performance, high performance. Our sources consistently highlight its speed processing, potentially up to 65,000 transactions per second, which is just orders of magnitude faster than Ethereum currently. And the fees are extremely low. This speed comes largely from its unique consensus mechanism, proof of history. It works alongside proof of stake, but proof of history acts like this global clock for the network, making transaction ordering super efficient. That enables the high throughput.
Wow, okay, that kind of speed changes the game, doesn't it?
The sources emphasize this makes it really attractive for things needing real-time processing, like decentralized finance, exchanges, maybe even mass adoption stuff like Web3 gaming.
Exactly.
And we've seen explosive growth numbers, right?
Right.
Over 28,000% in 5 years, I think one source mentioned. It's clearly popular with developers for DeFi and NFTs.
Very much so.
Plus, there's that native staking yield, 6-8% annually. That's an interesting draw, too.
It is. However, for the full picture, we have to talk about its past. Solana has had reliability issues. Network outages were a real problem. Right, I remember that.
Now, the sources do note significant improvements, like 99.95% uptime reported in 2024-2025. But that history, that track record, it's definitely part of its profile. It's something investors need to be aware of.
Okay, so the speed and ecosystem growth are undeniable, but there's that asterisk about past reliability, which probably contributes to its higher volatility, greater upside potential maybe, but also increased risk.
That fits. It's often seen as a high beta growth asset within crypto.
And the price targets mentioned in our readings reflect that potential, ranging from maybe $800 up to $1,500 as its ecosystem keeps growing fast.
Exactly. So for you, the listener, Solana likely fits best if you're seeking high growth. And crucially, if you're willing to accept higher volatility and the associated risks, its strengths are clear. That incredible speed, super low fees, the staking yield, and the momentum in DeFi and NFTs. The cons: higher volatility and a less proven track record compared to, say, Bitcoin's longevity or Ethereum's established ecosystem, even with the recent improvements.
Okay, that clarifies the three distinct profiles quite well. So we bring these three together: Bitcoin for stability, Ethereum for that ongoing innovation, Solana for high-octane growth potential. What's the synthesis here?
Well, looking across our sources, a pretty consistent theme emerges. Many suggest that a diversified approach, potentially holding positions in all three, could be a way to capture their complementary strengths.
So not necessarily picking one winner.
Right. It's more about building a portfolio that gives you exposure to different aspects of this digital economy. Stability from Bitcoin, innovation access from Ethereum, growth potential from Solana. It could help manage overall risk, by not putting all your eggs in one technological or philosophical basket.
That makes sense. It's about aligning your strategy with your own risk tolerance, your own goals, and using the really unique characteristics each of these offers. And as we've discussed, they are very distinct.
Which, brings up a really interesting question to think about. In this space that's changing so fast, technology, adoption, ecosystem health are all constantly shifting. What combination of these factors, maybe even more than traditional financial metrics, will ultimately define the true long-term value and resilience of a digital asset for you? What really matters in the end?
That's definitely something to chew on. A lot to consider, isn't it? Well, we hope this deep dive has given you a clearer, maybe more nuanced picture of Bitcoin, Ethereum, and Solana. Thanks for joining us.